Hey, what's happening? It's Jeremy Forcier with Cross Country Mortgage. I put together this video. I think it's really, really important to understand what's going on because there's so much confusion in the mortgage and real estate market right now with interest rates, with the Fed, how the Fed interacts with actual long-term interest rates, et cetera. And I've been getting tons and tons of questions about it. And I think that it's really important that we do a little education here as to what's going on. So over the last 2 weeks, right, interest rates have significantly moved up. So they have significantly moved up. And that movement has gone up almost 1 full percentage point over a 14-day time frame. So what I'd love to do is frame this for you and show you where were we, a couple weeks ago, where are we right now, and really, where does it look like that we're headed? Because things have changed at a very rapid pace. So I'm going to go ahead and share my screen here with you, and I want to show you some really important information. So first and foremost, this is a mortgage-backed security chart. Okay, so each one of these lines represents 1 day in the movement of interest rates. Now, this chart has what's called an inverse relationship, which means that the lower on the chart, the higher the mortgage interest rates are. These are securities that are traded every single day. So as you can see here, back on December 29th is when we started to see things run down. Okay, so remember, down equals higher interest rates. And every single day from the 31st, so right at the New Year's, we have been in this downward trend pattern, and this is moving very, very quickly. Usually the movements aren't as significant as this, okay? As you can see, this is today, and we're moving down very, very, very sharply into what some would call maybe a free fall because there's no level of support for it. So basically from here, okay, to here, interest rates have moved up almost 1 full percentage point. So that means if you're looking at buying a house, et cetera, you should absolutely relook at your numbers and make sure that you're still qualified and that the monthly payments are still going to be within your monthly budget, or if you have to make any adjustments. Now, with all of this said, I still have been getting a lot of questions around, hey, I talked to, online XYZ person, or I talked to a mortgage person last week, and they told me that the rate was 2.625. So just because rates are going up doesn't mean that you can't get a lower rate. But what people don't talk about is the cost associated with it. So what you're going to see here is a interest rates, what they actually are, based on a $500,000 loan amount and a $600,000 purchase price. So if I click submit, you will get the interest rates from Fannie Mae and Freddie Mac as to exactly what they are today and where they are trading. So this is a problem with our industry and communication. So as you can see here, you can still get 2.25% today. So you can tell someone that, hey, yeah, interest rate today, 2.25% is the lowest rate we can get. Lots of people say, awesome, that sounds great. What they don't talk about is this number right here. This is how much that interest rate costs today on it within the live market. So if you were going to get 2.25% today, it would cost you in fees of about $45,295. No one would ever do that if they knew what it cost. Okay, and as you can see, as the interest rate goes up, the cost starts coming down, but it still gets really, really expensive. So when people talk about market interest rates, they're usually talking about right where it costs about 1 point or 1% of the loan amount to 0 points. So right now, interest rates are trading right around between 3.75% and 4%. Okay, so you can see that significant movement and what the cost associated with is. Now, we think because rates are moving up so quickly that they will continue to do so over the next few weeks until we find some stability. So what does that look like for you? So I created this really simple presentation to follow where you can see that based on a $600,000 purchase price with 20% down, 1 month ago, rates were 2.99%. That means that 1 month ago, your payment would be $2,021.11. Now, rates today are, like I said, are right around 3.75%. Okay, so in 1 month, we've gone up a 3/4, 0.875%, almost 1 full percent. So that would put payments at around $22.95 on a monthly basis. So payments have increased, right, about $200 a month just in the last few weeks. Now, where do we think rates are going? This is why it still makes sense if you're thinking about purchasing and you are living within your budget, of course, and staying strict to what you want your monthly payment budget to be, because we're expecting now, because of how fast rates are rising, for rates to hit 4.375% in the not too distant future. Okay, so as you can see, if rates continue to go up and they go up another 0.65%, you're going to be looking at a payment of $23.96 and 57 cents. Right, so this is really, really important for all of us to know, to get educated on. Please feel free to share this with anyone who has questions about it, and be very, very cautious of when you're looking at loans with extremely low interest rates right now, that you're not paying through the nose in fees. If you need anything whatsoever, feel free to reach out to me anytime. My phone number is 415-717-7155. You can direct message me, send me an email, text, call, whatever you'd like, and I'd be more than happy to help take a look at your options. Okay. Have a great day. We'll talk to you soon.